In this video, we're going to talk about technical analysis. In no way this is going to be a detailed account of what this very, very complicated, very, very vast area of analytical tools is. It's also called charting, and there's a reason why it's called charting, all right? Because you actually grasp the movement of stocks or any other asset class by looking at the charts, right? So what it is this is the definition that I would like to refer to it. It tells us predictable patterns, right, in the prices. Once you find those predictable patterns, they play out every time certain similar thing happen that can be used in the short run. Now, this was, I think when we talked about trading, this is what I suggested. Technical analysis could be useful, but I did not explain it because it takes a lot of effort. It takes years and years of practice to understand, to basically get something out of it, right? So people think that fundamental information, because if company performs really well, it shows up after a few moments, or after a few days in some cases, right? So companies are selling more, but then they announce that they've sold more 2-3 months later, right? So, and then the prices would gradually move to the intrinsic value because a lot of times the analysts don't understand how these fundamental shift in the companies are going to be impacting its performance in the future, right? So it takes time, and therefore technical analysis is much more useful, right? Because you're looking at the current volume, you're looking at the price history, and you're looking at where it's going to go, right? And yeah, so it is fundamentals. Fundamentals are important, the ardent admirer of technical analysis would say, but they say in the short run, there is a lot of irrational players, there is a lot of behavioral sentimental factors that can drive the price. So in order to find that, we have to rely on the technical analysis. But one of the reason is I am not giving or talking about it in the beginning is this is useful, but it's, I think the hit and miss, in terms of hit and miss, it's not very, very high up there in terms of predictability and probability, right? So a lot of people, especially now with the raging fade about investment and trading that you see among millennials, there is a lot of people who are offering their advice about technical analysis, and I find a lot of it is so wrong. So you want to take it with a pinch of salt. You should not, especially like I say always, you want to practice with the practice account, with the paper money, right? You don't want to put your hard-earned money into trading with some of these fades that we see, right? So the reason is charting is not useful is because our trades are not so fast, right? The big institutional guys, they have an advantage. Their computing power, they have latency, what is called, right? That's the speed of execution of the trades. So long-term investments, it's not useful. And these are some of the reasons that are given, but I'm not saying it's completely useless even for a long-term investment. You can actually find a good time to sort of enter the market, even though it doesn't matter if you are investing for 3 years, 4 years, 5 years, that advantage of finding the right price may actually disappear completely, right? And there are, like I say, there are a lot of false positive. So you get this timing thing after working on it for like years, right? 3-4 years, then you figure out, okay, this pattern is making sense. And I know there is a window of opportunity, right? So that's why I say it's immerse yourself, and it's not for the short term. I'm just going to go through some of the basic, most common ones. So the moving averages are very, very important in the sense because sometimes it can tell us where this the price is going to go. Absolute momentum, relative momentum, these are two ways to look at the price movement, right? And you can see that while looking at the charts, right? And in many ways, you can find these trends, right? Upward, uptrend, sideways trend, and downtrend. And there are certain basic stories about it that you would hear specific. But again, I mean, if you go with a thumb rule, to begin with. And I'm not going to explain what's happening here. You will see it all the time. So there is, higher high and higher low and lower high and lower low. All this plays out. It's a very straightforward, very simple charting that you see here. But the point is, it depends on the company, right? And what the company is doing yesterday, today, right? That would determine why this trend is working out in certain ways. And there is no, I mean, you have to remember probably 200 different chart movements at least to be able to use it. So some of the most important trend indicators that people use, moving averages are straightforward, very simple. So there is simple moving averages, there are exponential moving averages, then there is relative strength, Bollinger Band, MACD, balance, Donchian channels, support and resistance, and there are so many other indicators. I mean, 600 are the most common ones that people use, but they could be like, I would easily think 20,000, 30,000 different technical indicators that people use, right? So moving average is really, really simple. This is where you should start. And I think anytime you're looking at the chart, you would find this moving average. Now, this is a chart that displays the Intel's stock price and the 50-day moving average, which is basically 50-day mean, right? Mean, simple mean, arithmetic, simple mean. With this chart, there is a problem. This chart shows Intel to be the blue line, which is not the case. It's actually the blue line. There is some problem with the legends. The 50-day moving average is blue because it's smooth, right? And it's smooth. So you can see the point A and point B, they are showing us something, right? Point A is the point when the stock price has crossed the 50-day moving average, right? And the moment that happens, you can be sure that the stock would continue to rise, rise, rise. I mean, that's how it typically plays out, right? But it obviously defies the logic. You can see the point B, it breaches, the price breaches the 50-day moving average, which is blue. By the way, let me say it again. There is some problem with this legend. It's basically interchanged, so don't get confused. Similarly, this is the Dow Jones Industrial Average and the moving average, right? And so it tells you once the Dow Industrial Average, the blue line, it crosses the moving average, that's the sign. So you can see when it reaches moving average, when it kind of reaches a straight line, you can see there is a fall in the offing. You can't really rely only on that, but this is one extra thing which tells you, okay, the general direction of the market or that stock, it tells you about that, right? Bollinger Band, MACD, OBW, wave cycles, a lot of relative strength. So relative strength is also very easy to use, and you find a lot of reference in the news, financial news, right? So this is basically how your company's stock is doing vis-a-vis the entire market. Let's say it's a Japanese company, let's say Sony, how the Sony's relative strength vis-a-vis the stock market in Japan. So Nikkei 225 or even Topix, which is all the first class stocks, right? So this can also be used with the industrial, within the industrial, where you are comparing the, let's say, Toyota vis-a-vis the rest of the auto industry around the world, right? So relative strength, the performance of a company stock vis-a-vis the rest of the market. It's a simple technical analysis. There's breadth, there is trend statistic, confidence index. There are a lot of different ways to use technical analysis. And I would highly recommend, I mean, there are a few blogs that I can direct you once you are in that mode. But for the moment, I don't think you should use it. You should practice these, some of these different technical indicators and see if it is useful for you in the long term again. And so, like I say, it's 600 plus indicators. You'd find a few that you really nail. There are many others that you don't find very useful. And that's something you discover by your trading style, but the kind of stocks that you pick. And on that note, I want to also tell you in the next video about what kind of stock you should pick, right? kind. I'm going to talk about the kind. So that's in the next video.